Okay, it is, let's see, Tuesday the 24th. This is Shane with the Rational Trader. We're reviewing the day's actions. We had a pretty big overnight range, so I don't start till 6:45. That's right around in here, right here. So I just set the system to, whoops, I set the system to automatically start at 6:45 instead of 6:35. It's kind of the normal time that we start. So we just change this right here, and then just it starts when it starts. So in this case, there's a really nice fall here. I don't get any predictions to short this, unfortunately. That would have been nice right in there. Even that break would have been clean. As it is, it didn't give me anything. These are in the too aggressive, chasing category. We nicely stay out of this chop here, so I'm happy to see that. This is a problem. Okay, that's a clean 241. It's a break short, so it sees this that break right there and says, I think that short's going to succeed, and it's correct. But we don't take the trade because we're staying out of the noise. And so something we've been talking about is, should we not apply our noise filter to break trades? In this case, clearly that's what I wanted to do. Whether that's good overall has to be tested. Okay, and we have the tool to do that. It's just a matter of doing it. But it's just like, trading is like baseball. It's not just one game. It's a whole season. So it's the same thing here. There's a very clearly a nice trade I would have caught here, given the prediction, if I'm not using the noise filter for breaks. But how many other times did the noise filter keep me out of trouble? So that just needs to go on the list to test. There's other things in front of it right now, but clearly that's something we'd like to look at. Okay, so then some interesting stuff happens down here. Here's a break lower that is predicted to fail, which is kind of right, just a little bit early. So you could take a 10-tick stop there. And then here's the turn is predicted to fail, and it's correct in that, yeah, the turn's not going to succeed. But the trailing gets me, because what happens is we get a really sweet entry on these failed turns, failed pullback signals. And the market moves down enough here that I move the stop to entry -5, and then it gets me right on this little pullback. So I end up missing this. Take a 5-tick loss there. Looks like we get there's another break here that doesn't succeed. It's really the same scenario here, where in this case, here you're getting nicked basically. The market's turning a little bit. It's not completely turning, but it's a function of the market's a little extra volatile. It's really the same thing happens right here. You can see that right there. You're getting tagged. You're getting long right at this level, and then it's just enough to stop you out. Okay, so that's it's a similar scenario. You end up making you get your 10 ticks, so you move the stop to entry -5. So you save a little bit there. Okay, so then a couple things happen here. We short right there. This is the same signal, basically, a failed, same signal of that and that. It sees this turning behavior and says, I am predicting that turning behavior will fail. And so 222 short, and we get a full 20 points there. So that's what that says. That's 80 ticks right there. So it's basically classic trading. Small loss, small loss, small loss, big gain. So at this point I was up like $300. And then let's see, I give some of that back before we're done here. Let's see. There it is again. So here, the break is going to fail is the prediction. And I'm actually getting stopped out to the tick and then turning for actually finding the turn. So that's disheartening now, but what I really like is that when the market's the volatility goes down, I would expect this to be just an awesome trade. I've seen this already where we find the top and find the bottoms on that trade. So we'll have to stay with that. This is the opposite, right? I'm breaking higher and predicting that the break will fail, but it's wrong. So take loss there. And let's see. This is looking a little sideways to me through here. So we're making some cash because the move is big, right? So there's a successful trade there. There's a stop out here. This is a 221. So it's looking at this. It's a failure code. So it's looking at this and saying, okay, we're not going lower. We're going higher, 186. So that makes 7.5 points. And then we give some of that back here and here and here and here. Yeah, so this looks, you can see when you and I look at it, we go, that's looking choppy and ugly to me. There's enough movement there though that we're not staying out of it. And let's see, 274. So this says this pullback's going to succeed, and so that prediction's wrong. This is really sweet here. And another cluster for those of you that are looking for clusters. 101 is by itself is considered too aggressive. It's too noisy of a turn signal, and followed by a 196, which is also an aggressive signal. But if you're in the group that's looking for clusters, then that's a sweet turn right there. It's the similar behavior here. Now this long I actually take. Again, that's a 151, which is failed break lower. So the market's breaking lower, but the prediction is failure. Get long. That makes 7.5 points. And then, okay, so we get long there and take a 10-tick stop. And the 222, this is a short. It's just a hint too soon, you can see. So right there. And then that's it for the morning. So they're quite a bit more, I want to say choppier than yesterday. No, not really. A little bit. I mean, this is very typical behavior to see a big move and then it go sideways like this. That's not at all unusual. This is a nice move here. Let's see that pull back and get in. It just doesn't. It sets up too aggressively for me, given what I'm willing to do right now. Even this here, this is like a little bit of an ugly move, but if you're able to get in on that break, that's pretty clean. So all in all, I made 180 today, and then we'll see what tomorrow brings. The market, still a lot of movement, still pretty volatile. And then on the left here, I'm experimenting with. You just want to kind of ignore the results. This is 0 because there was a mistake in here, and here I had it just doing everything possible. And what we're doing here is defining, rather than the specific behaviors that I have coded, like the turn or the pullback. Instead, use a user-defined strategy and then call for an order flow prediction based on that strategy. So this is a fairly popular here in terms of looking at the market going into what's called a squeeze. This is using Bollinger Bands and Keltner channels. And then when it breaks out of that squeeze, which is right there, that's the signal to, okay, take an action, either get in long or get in short. And some strategies call for, you look at this momentum indicator on here and choose your direction that way. That's not what I'm doing. What I'm doing is we're now adding machine learning. So when the squeeze fires, make a prediction, long or short. And so in this case, the prediction was don't do anything, and so we didn't. But the model's not correct here, so the results are not. That's not something you want to look at and go, oh, look, it doesn't work. That's not what we're after here. I actually built a model today that we'll be applying tomorrow that would be more appropriate for this this chart. The problem that I see is that the models I've built have both implicit and explicit assumptions that the chart type is a range bar. And so I didn't realize that until I went to go create this user-defined behavior feature. And it's very interesting how you're kind of blinded by your own biases. And so anyway, to deal with that, I built a model that takes out those assumptions, and then we'll see how that we can start performing. We can start testing with that tomorrow and see how that works. And then if I like what I see, the next step is, okay, take these new models, this new architecture, and build models that are trained on data just through December 7th, and then we'll test it on the H contract. And then the same thing just through the 2nd of February, before the market got super volatile. And then we can use that to test on the M contract. All right, so that is coming up very soon here. I'm actually trying to get this ready for release this weekend. So we'll see. It's Tuesday. That's possible. Yeah, we could do that. We don't even need the stars to align. We just need just sort of normal, nuts and bolts testing, and then response to any issues we see. Okay, that's it for today. We will see what tomorrow brings.